In 2 weeks, the 28th UN Climate Change Conference will meet in Dubai to assess the world's progress on climate change and to reinvigorate efforts to bring down emissions by 2030. Now, one of the areas of focus will be transforming climate finance. Our next guest is at the forefront of making it easy for investors to ensure that their portfolios understand climate risk. While MSCI is known for creating indices that are tracked by investors around the world, they're also helping investors understand ESG, environmental, social, governance factors, and climate considerations, and how that can affect an investor's portfolio. Joining me now in studio is Henry Fernandez, Chairman and CEO of MSCI. Thank you so much for being with me.
Thanks for having me.
This is a very big, huge issue that you have the task of boiling down to a way that can be measured, that can be indexed. It's so big, especially when people's definition. Right. What is ESG? What qualifies as sort of a climate-conscious portfolio is still evolving.
Yeah, so first of all, we normally differentiate between ESG and climate. There is no question that there is a component of climate in the environmental pillar of ESG, but you need to cap it. Otherwise, the climate component can swamp everything else and might as well not have ESG, right? So we look at ESG as a component, but as a separate entity, as a separate risk, as a separate opportunity. So it is big for sure, and the world will go through a major transformation of the $100 trillion economy, and that's going to be led by capital. And the capital will be repriced and reallocated according to ESG, according to climate opportunities and climate risk. But it's got to start with measurement. You know, you have to first say, what is the nature of my problem? What is the nature of my opportunity? If you don't understand that, then it's very hard to look at a portfolio and say which way you go. Right?
And how do you deal with the issue of the emitters? Some who want to have a climate-conscious portfolio will still put, say an oil and gas company in there, because when you look at what they're doing to reduce their emissions or on their policies, it kind of qualifies.
So once you start measuring the carbon emissions of today, the carbon emissions going into the future, you got to measure the risk, physical risk and transition risk, and then you have to put values on the assets, based on that risk and based on those emissions. So those are 4 pillars that we focused on. But at the end, the question is, what strategy, what investment strategy do you follow? And by and large, there are 2 types of investment strategies. There are the ones that say, I don't want to go through the transition. I want to go direct to the low carbon emitters. Yeah. And I don't want to have anything to do with the medium or high carbon emitters, because I don't want to entail that risk. That's one strategy. And we create an index for that. The other strategy is the what we call climate action strategy, which is really financing the transition. So in that second component, you can have 2 oil and gas companies. One that is only oil and gas and is not looking at renewable energy, and therefore you don't include it in the portfolio. But you may have an oil and gas company that is looking at the transition, is investing in renewable energies, is investing in EVs and in batteries and all of that. So you put it in the portfolio. That's what we call the transition index.
And because you are so front-facing to these investors, you're really aware of sort of what the appetite and what the demand is. And ESG can be fashionable. It can be not fashionable sometimes. We talk about, climate change, and then oil runs up to $100 per barrel. How would you characterize kind of sustained interest, and has it ebbed a little bit?
Yeah, the first thing to understand that the large majority of the pools of money on the world run on a fiduciary duty of providing high risk-adjusted returns. They're not in the business of creating social progress or environmental progress. They're in the business of delivering financial performance to the people that they manage the money for. So therefore, in decarbonizing and the risk in your portfolio, one of the very key questions is, at what pace do you do that? Because it's a balancing act between financing the energy of the world today versus financing the energy of the world tomorrow. So if you go too fast, your performance is going to be low. because you're cutting out the things that need to be financed today. And if you go too slowly, you're also going to underperform because you will be be too slow. You will be caught with stranded assets and lower price assets. So that's what we're trying to help our clients.
When you think about it that way, it's hard to think of. I guess you move away from the conversation about whether this is fashionable or not. It's more about the timeline.
It's for sure not fashionable. I mean, let me back up. It's for sure not a fad. It's for sure not a moment, of interest. It's a secular and intrinsic component that we're going to have to live forever.
I want to talk about some other risks that we are thinking about these days, because it's your job to sort of factor them in for investors. I mean, how do you deal with geopolitics right now? Is that a question that you're getting a lot?
Quite a lot. Definitely. A lot of people have gotten used to the last 20, 30 years. And the first thing that I tell them is that was an aberration in the world. Most of the world, for most of the time, is an uncertain and a tough world, right? With a lot of risk, geopolitical, economic, financial, and all of that. So we're just going back to norm. What we experienced over the last 30 years was not normal. It was abnormal. We all wish that it will continue. So the second part is, okay, how do you incorporate all of that into your models and into your asset allocation and into that? And we basically create a lot of tools for people to understand how to deal with the transmission mechanism from geopolitical risk to investment risk. In a way that people can then take action on their portfolios. I
got to let you go, but I'm going to ask you a bonus question about the crypto markets. Everybody in the U.S. is waiting for some sort of Bitcoin ETF, and might there be a future in which the MSCI is creating a crypto index?
We for sure are in the business of doing that. We created a digital asset, taxonomy, and all of that. And there will come the day in which this will be approved by the SEC. It's just a matter of time.